Guys, it's Desiree with 360 Financial Group. I'm just here with my good friend Randy Webster. He's on the board of directors for the Tri-City Chamber with me, and we were recently having a conversation about his life insurance coverage, and he was telling me all sorts of good things about what he had, and so I thought it would be great to have an unbiased feedback from somebody who's had insurance, a whole life policy for about 15 years. So, Randy, tell me what you were telling me about why when you first bought the insurance coverage that you have,
Yep.
what type of policies you have,
Yep.
and kind of why you decided to invest in those when you were younger.
Well, actually, I have 3 policies, and the first policy I got was a 20-pay whole life insurance. And the reason I bought it, I was about 23, 24 at the time, and the reason I bought it was that I didn't know really what I wanted to insure. You know, I didn't have a house, didn't have a lot of assets, didn't have a wife or kids or anything like that. But I was told, and I did believe at the time, that life insurance only gets more expensive as you get older. You know, we all have that. There's going to be something that hits us eventually, and age alone is one of those conditions that increases the price. So I looked at, you know, why that would fit for me. And so the second part of it is that it had actually like a retirement benefit to it as well. There's this cash value that builds up in the policy over time, and it's quite expensive initially, but over time it really starts to pay off. And the thing about how it fit into what I saw was the opportunity to leverage it up, to take cash out of it without penalizing other parts of my portfolio.
Right.
So the first one was that if I wanted to buy a house, I knew that I would have this cash equity that had built up in it, and I could use it towards a down payment, which I did.
Right.
Actually, I used that. And then because it was growing so fast, I wanted to replenish it. I put it all back in. I paid off the loan that I took against my policy. And the second part about it is that for retirement, you know, the last 5 years of an RRSP, when you hit 65 to 65 to 70 or 60 to 65, those last few years, that the size of that portfolio grows immensely because of the tax sheltered nature of it. So I was going to use, and I'm going to still plan to use the life insurance, the cash portion of my life insurance, to actually finance the early years of my retirement. Right. Because at that point, I'm not going to have all the financial responsibilities. I'll have the coverage for life insurance up to that point. Once I hit that point, presumably I'm fully paid off all my debts. I don't have kids, so I don't have to worry too much about, you know, leaving some big nest egg aside. But even if I did have kids, I would. It's the rest of my estate that would really matter. And it's really at that point, it's a lot of things like the transactional costs that go along with death at the end of life, that the insurance component will more than cover.
So how old are you right now?
I'm 43.
And when did you get your first policy, or when did you start paying?
I was 23 or 24.
Okay.
And so I must have been 24 because I'm a year out from that policy being fully paid off, in which case I don't have to contribute another dime. I'm still covered for the rest of my life, and it continues to accumulate wealth.
Right. So at the time when you started to make that investment, you're obviously in your mid-20s, like was it a big decision to start investing that money, and did you consider, you know, owning term insurance, or how did you make the decision to start investing, you know, a bigger chunk of money into a life insurance policy?
Well, actually, it wasn't a big deal because, you know, you've got to put money aside for something, right? You really do. Like at the end of the day, you can't just spend what you make. You have to try to put it, whether it's $50 or $25 or, you know, $5,000 a month. You still have to put money aside. And so I just needed to figure out where I'm going to put it. And so I had an advisor at the time who gave me the honest truth about trying to build up portfolio in a number of different ways. It's strategic, right? Right. It can't be all in one area. Term didn't make a lot of sense to me, other than the whole part about having, well, insurance is good because at the end of the day, it only gets more expensive as you age. Right. But term insurance for me didn't make a lot of sense because I wasn't insuring my life against specific liabilities, like a mortgage or a business or you know, kids and their education. I had it more as I just needed to have some sort of insurance, and so whole life made a ton of sense for me. It was more expensive for sure, and I didn't get the coverage, but I had that whole cash component like I talked about earlier. And I saw it accumulate wealth in the early years. So a couple of years later, I actually bought another policy, a similar policy. But even in those few years, I could see that, you know, how much more expensive it got, just simply from going from 24 to, I was like 27, 28, how
Wow.
much it had actually changed in that period of time.
Yeah.
And I realized at that time that, you know, there's a lot of things that people have regrets on. You know,
Mhm.
I wish I would have done, I wish I would have invested in Apple back in 1995,
Yeah.
right?
sure.
But that's one thing I'd have no regrets on. I actually know I made a really good decision. My advisor made really set me up for success for my whole life because of that.
Good. That is exactly what I like to hear. And so for anybody contemplating whether to invest in a whole life policy, have it paid up in 20 years, I mean, he's not even 45 and he's got a huge asset that he's got paid up for life. So I'm just glad to hear that you're happy with your decision, and hopefully if anybody out there is looking into it, you guys want to give me a shout, or I'm sure maybe Randy would be happy to talk to you
That's
too.
right. Yeah.
But thank you so much for doing this.
Thank you, Desiree.
And yeah, we'll talk to you guys soon. Thanks.
Take care.